Uganda's import balance has continued to widen, surpassing over $3 billion, according to figures from the Ministry of Trade and Industry.
If you look at the data for 2013, our exports were about $2.8 billion. Imports is about $5.8 billion. So clearly we have a trade imbalance of about $3 billion.
Silva Ojakol, the Commissioner for External Trade, says that the state of affairs in the domestic sectors, which hitherto need to spur export growth, still need to be propped up.
But you got to know that the flowers, like any living thing, flower, a human being, an animal, has a lifespan. The closure of some of the fish factories is because of the overfishing in the lake. People harvesting immature fish, people, what we call unsustainable methods of fishing. That is what has sent this down.
He also says that in the short run, the investments in the country's productive enterprises, in particular factories who target the regional market, will soon pay off.
Many of our manufacturing establishments are upgrading. Roofings has upgraded. You know, they have a new plant in Namamve. We had MMI integrated coming in and establishing in Jinja. The sugar mills have been expanding their production.
However, independent experts, on the other hand, are arguing that increased public investments, in Uganda's case, could easily shore up production and exports against imports.
Issue of finance being available, but going more towards the public sector. And so there is always an issue that one needs to be careful that the public sector borrowing doesn't end up crowding out private sector and making it more difficult for the private sector to borrow.
Raina Ojon, NTV Business.